Welcome back to another Market Open live stream. Let's go ahead and start by doing the normal thing, looking at the market to see what's going on pre-market. So let's hop on over into Webull and find out what the heck is going on. We know that there is definitely some red, but let's actually start at the red. So we've got Blink down 4%. Ouch! All of a sudden, Blink down 4%. Charging company, although it was up 13% yesterday. Matterport, look at this, down 2.75% today. I'm ready to add to this position if it falls to 13.13 today. That's the number I'm looking for. Microvision down 2.54% following that 3% decline yesterday. So that's a little bit more than a 5% decline. All right, there we go. We've got, let's see, Canoe is down about 1.8%. Ideanomics, 1.63%. Baidu, Energy, Enphase, Dave & Buster, C3 AI, all these guys down about 1.5%. Neo, Peloton, PayPal, XL Fleet, Shift, MP Materials, Redfin, Etsy. A lot of these guys, Enphase just moved a little bit, all between 1.16 and 1.5% down. We've got Tesla down 0.8% following a 1.9% gain yesterday. Churchill Capital down 0.91% following 1.49% decline yesterday. It looks like just almost all tech, all EV, all the energies, but you've even got some of the recovery plays in here that are red as well. So what's green? Well, you've got U-Time, which was up like 113%, then it was down 48%. So it doubled, then it halved, and now it's up 11%. This is interesting. Pay attention. We'll keep an eye on this one. I don't even know what this company does. Somebody just suggested, Kevin, look at this company. It's going crazy. And it's gone crazy in both ways. Then we've got Levi's. That's up a good 6.8%. I mean, that's, I guess it's Levi Strauss. Kind of impressive. Clever is actually up 2.8% yesterday and 4.87% today. It's been pretty oversold. JP Morgan up about 1%. Plantronics, FRX. No, I'm sorry. Well, yeah, FRX is actually up 0.8%. Romeo Power up a fraction. And that's it on this section here. Let's go to this one here. There we go. So on the all stocks page, we have, we'll add a few stocks here. So we've got Naked, FOBA TV, Carol's Rast, Faraday Solutions, another EV manufacturer here, up 3.3. So yeah, it's sort of interesting. You've got a lot of red amongst tech and EV and energy, but you actually have Faraday Solutions up 3.3%. So that's one that is up. You got the cruise lines trying to come back along with American Express. Looks like you got financials doing better. I mean, if we had a sector that was doing better, it looks like it might be that, like Chase, Wells Fargo. But otherwise, it seems like more, I would say a lot more red than green. It looks like probably we're almost 2/3 red, or possibly even 3/4 red. We'll see how that opening bell looks when it's time for the market to open. Okay, so all right. Let's see here. Okay. Somebody mentioned there was a little bit of chop. Hopefully that goes away. We'll try to make a little change here. Okay. Anyway, so we are now 4 minutes to the opening bell. Looks like we've got CNBC on commercial. I don't know what Varney's up to, but that's okay. We can go ahead and jump around here. Oh, let's see. Varney's talking about Bitcoin at 59. I mean, this is resistance. Is this exciting? Oh, Coinbase.
Things that are popping up. You see XFi, you see other things that are actually making this exchange so popular. And what they're doing is democratizing access to cryptocurrencies. And
oh my gosh, everybody that does anything today is democratizing.
One of the big challenges that they have, which is really, if we actually treat cryptocurrencies continued as an asset, we're okay. What will happen if other cryptocurrencies come into play and if there's any more regulation? But the future looks bright for Brian and Fred, the co-founders.
I want to talk to you, but because you specialize in big tech, I want to talk to you about the unionization of big tech. We're going to get the results of Amazon's union.
Oh, check this out. We got producer price inflation, the PPI, producer price index, measured by the PPI. Take a look at this. Producer prices increased more than forecast in May. I'm sorry, in March. Jeez, man. I gotta get my I'm not effing leaving coffee to hit. Maybe I should actually take a sip. Nice, fresh, hot coffee. All right. U.S. producer prices accelerated in March, exceeding expectations and suggesting underlying inflationary pressures continue to build across the nation's economy. It's not a surprise. We're expecting to see movements here March, April, and May. And it wouldn't be shocking if this is one of the reasons the market ends up turning red. We do have CPI data as well coming out on the 13th, which is in 4 days. Producer price index for final demand increased 1% from the prior month after a 0.5% gain in February, the Labor Department said on Friday. The median estimate in a Bloomberg survey of economists called for a 0.5% increase. Okay. So it increased 1% month over month from the prior month. Yeah? Month over month, 1% versus an estimate of 0.5%. Producer prices rose in March, signaling inflationary pressure. Yeah? And there's that 1%. US PPI. I wonder if we can pull up Bloomberg and look at that chart. We'll try that after the bell opens. The data typically scheduled for 8:30 a.m. New York time was delayed. Stock futures declined, basically as people waited for it. That's interesting. So they delayed the release of a piece of data that's usually always on time, and it was bad news too, huh? Interesting. Nothing to see here, folks.
Is probably not something we're going to get for 22 months.
Right. And, with a Fed that has already been very clear about saying it's going to err on the side of staying more.
Yo, where's my bell?
And wait for the actual economic data and the full employment evidence. And
where's the bell?
Running hot for a while before they try to anticipate it. It's not a proactive Fed anymore. They're not going to assume the end of the pandemic.
That is the opposite of what I expected.
With, the economic recovery until it's right in front of us.
Yeah. There's the opening bell, guys. Obviously, final trading day of the week as we see Brett fill in. I'll look at the NYSE and the NASDAQ as well. We did talk about briefly some of these upgrades in the industrial space, David.
Yeah, I don't care right now about upgrades. And they're analyst upgrades. Analyst upgrades, I always think are funny because it's kind of like the analysts are like, a stock we like is going up. How are we going to justify the fact that we continue to buy it to our clients? Upgrade. Oh, a stock we like is going down. How do we tell our clients that don't worry, we're on it? Downgrade. I'm jaded. Very, 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 very jaded about the suits. When I hear the suits say one thing, I think the other thing. And you know who's the face of that? Bill Ackman. March. Go back and watch those videos from CNBC in March 2020. We need to lock down the economy. We should shut down the stock exchange. This is really bad. We might be facing martial law. Meanwhile, he's shorting the crap out of the market. Brilliant. I mean, biggest troll move ever. I mean, it's going to take a while to see somebody replace that troll status. Ay. All right, so this is actually interesting. Some of the things that were green, like, see, Clever just bounced even more. Yeah, see, we got some green candlesticks off Clever right here. We've got, let's see what else we have here. Let's get, okay, there we go. Okay, so, my computer screen. Yeah, there we go. That's better. All right, so Naked is up, it's up 12%, but it's actually red candlesticking, so it had a good, strong open here. Yeah. All right. No particular run here. Clever. I got to pay attention to it. Faraday's falling. Ooh, Moderna's got some nice candlesticks on the open here. GoPro, Steel Dynamics, Bitcoin. Bitcoin's at now 58.5, 58.6. Sundial. Okay. JP Morgan. Nice green candlesticks. No big moves, though. Even though we got big green candlesticks on some of these here, these aren't really big moves to the upside. Keep an eye, though, on, let's see, Moderna. Yeah. No, not moving far either. No, that one's moving down. Clever's barely moving up. Okay, this is bizarre. All right. Then on the flip side, we've got Clover that's down after being up nicely yesterday. Canoe's down 3.75%. Oh, here it is, 3.5%. Down back under 10 here. Arcimoto's down. Here we go. It's now, see, Kevin Stock's good day yesterday. Kevin Stock's not such a good day today. API is down. Jivo's down. DoorDash, Neo, Enphase. Why Enphase? It doesn't make sense. Back under 150. Hey, buying up. What I'm going to do is I'm going to end up reshuffling a bunch of miscellaneous stocks I have and just concentrating them into some of my faves here. It's, not a bad idea to do that on a red day like today. Tesla's falling. Tesla was down 0.8%, and all of a sudden it's down even more. I've gotten asked frequently about this weekly data for the M1, M2, so it's a little bit more tricky. So quick explanation is they're still publishing the data weekly. They're just not doing the seasonal adjustment weekly anymore. They're doing it monthly. So the data's still there. It's just the seasonally adjusted version that's not getting published. If you look at the footnotes for the discontinued segment, you can read more about it. But yeah, I'm not concerned. How do I feel about Matterport? I'm ready to drop 500. I'm ready to buy 5K shares on the thing. I don't know what does that translate to. 5K, 5,000 shares at 13. Oh my gosh, I should make that 50,000. Okay, maybe not that many. That's a lot. No, I really like Matterport. They're caught up in this SPAC mess. I don't really care. I like Matterport, and that is very oh my gosh. You know what kind of pissed me off yesterday too? I should try to pull this clip up, but I don't know if I'm gonna find it. So Jim Cramer, and look, I love CNBC. Okay, don't get me wrong here, but I got a bone to pick with Jim. Jim Cramer had XL Fleet on, and he's like, "Oh, these guys are great. This is so innovative." And I'm like, "Jim, I had a video. I'm like, what are you talking about? This is not a great company. The break-even cost is way too high for commercial manufacturers to act, or commercial truckers to actually use XL Fleets. It doesn't make sense for businesses, Jim. What are you talking about?" And he was on with the CEO. So in fairness, he's talking nice to the CEO. But, he's like, "This is a great stock. Buy, love it, whatever." The thing goes up, on the Jim Cramer pump, like 20% the next day. Then some other company comes out. I think it was Citron, and they're like, "This is a $60 stock." And the thing runs up to like $30 from $19 or $20. And I'm like, does fundamental analysis just not matter anymore? Like, this is ridiculous. This is not a good company. Is what my thought was. Okay, and I'm sorry if you're invested in XL. It was just an opinion that I had at $18, $19. And the thing runs up to like $30, $32, and I'm like, I'm freaking out. Like, whatever. I mean, I didn't have a play in it, so it didn't really matter. Well, since then, you could see the chart since then. And it's not just February either, if I remember correctly. But the darn thing's not trading at $30 anymore. It's not trading at $20 anymore. It's trading at $8.41 right now. But what I wanted to, this was the Cramer pump right here. I guess Cramer pump was right here this day to like 26-ish. And then the next day, the other pump came up. So it was insane for like those 2 days there, right? Okay, so what's my bone to pick? Well, yesterday on the lightning round, Jim Cramer, somebody calls in about XL Fleet. They're like, "Hey, you recommended XL, hasn't been doing too hot." And he's like, "Well, a short seller said some bad things about the company, and then those bad things happened. And when the short sellers are right, that's not a good sign. So for me, stay away." Like, that's almost verbatim what he said. And I'm like, dude, what? Come on, Jim. Seriously? Oh, man. Oh, yeah. I'm sorry. Like, that one pissed me off a little bit. Okay, so I had to get that one off. Like, that's nonsense. Anyway. All right. So where were we? Okay, Clever is moving up. It's continuing to move up. Hey, I wonder if we should buy it. Let's see. Oh, we're above VWAP right now. Okay. I don't know. Do we have the volume? Let's see. It actually does not have a lot of volume. I just had a couple spikes here, probably more than usual. The thing's very, very sold off. Marijuana manufacturer. Like, would you call it a manufacturer? I guess you would call it a grower. Probably be more like it. In Colombia. Yeah, much more volume all of a sudden than we're used to seeing. I mean, we're used to seeing this stock trade with somewhere around 1,000 to 3,000 shares. Okay. Yeah. Yep. Consistently. 500 shares, 600 shares, 1,000 to 3,000 shares. I actually own a chunk of this company. I mean, I shouldn't say a chunk of this company. I got some stock or some shares. But now we're red candlesticking. The volume evaporate? No, the volume's still here. It's interesting. I'm going to keep an eye on this one. Maybe it is. I wouldn't mind buying a little bit of this one. See, and the unique thing about this one is I could buy it for a swing, but even if that swing didn't work out, I would be lowering my cost basis on this one, and I kind of wouldn't mind. But I feel like I want to wait for a little bit more red. Let's see here. Let's I don't know. Keep an eye on this. That's what we'll do. We'll keep an eye on this. I'm not convinced yet. Palantir's up. Wow, there we go. That's also nice. You know what I'll do is we'll set a limit just in case. I don't know if it'll actually go through. Usually when I set these limits while we're streaming, nothing works. Okay, so can I set a limit order here? Let's set it at, I don't know, 10. How much do we want to buy? Well, that's lame. Let's do like 40. 4,000? Yeah. Okay. It's just not. I doubt this is gonna fill, but we'll see. If we get that confirmation. I want to get in like ideally. Right. Well, let's see. Let's see if we've had a prior level here of support. So let's just leave that right there for a second. Let's start with that. So I like the idea of under like 1103. Let's zoom out a little bit. Let's just go to day. No, day's not. I don't think day's going to be so helpful. No, it's hard to say. Let's see. What do we got here? There's an 11. Yeah, like this one's not so good. Okay, so we do have some level of support around $9 basically, which is pretty low. So let's drop in a 9, 8-ish, somewhere around here. Oops. Kevin, I'm supposed to click horizontal. Somewhere around here, 858. Okay, that's low. And then you've got horizontal somewhere around. This one's tough. There's just not as much history here. I feel like I'm shooting in the dark a little bit more in terms of like a trade on this one. Yeah, let's see here. Oh, of course, it's just gonna run. Fine then. Fine. Oh, look at Sundial. Sundial's coming up. Palantir not moving as much right now. Oh, look, it's playing right at one of our lines. It literally feels like it's on the shelf of a line that we've previously drawn. All right, so this one's kind of giving up. Let's see, what's the volume here? Volume here, 400K. We had like a 1.5, 1 million, 500. That's a lot of volume. Let's see how that compares to the prior days. So Clever's got a nice movement. Now up 10.3%. So, but I kind of want to wait for a little bit more confirmation. What do we got over here? 1.2. Yeah, it looks, that was the opening volume But beyond the opening volume, we're like 200 to 300K on Palantir. And the opening, or yeah, the first few minutes over here have been more like 4, 3, 600, 1 mil, 3, 4. A lot more volume on Palantir today. So we'll keep an eye on that one. We'll keep an eye on Palantir and Clever. How about what else is moving here? Carnival's moving. Not substantially, but it's got a nice curve here. What else is going on here in the red? So Canoe, even Canoe is trying to come up. Canoe's coming up. Upwork is not. It's simple. Fastly's not. Zom is not. Archimoto, not really. API, no. Falling. Lots of falling. Penn is trying to get back to under 100. It looks like. Liato. I reached out to Fisker, by the way, which I don't always reach out, but I thought, Fisker has been one of those stocks that has, it's been a trader stock for a couple weeks. Back in February, it was, and like a momentum stock. I reached out. I'm like, yo, we should do a CEO interview. And they're like, we're not doing any interviews right now. I'm like, okay, whatever. Like, why not? Whatever. I mean, Fisker, I feel like that's one that should be putting its name out there more, especially along with the other craziness that we're seeing. Everybody else is putting out marketing like crazy, especially in the EV sector. So it's a little interesting. All right, but I'm still open to it. Yeah. All right. So what do we got here? So 100,000, 120,000 on Roblox. Okay. All of a sudden, big volume push over here. Yeah. Nice big volume push on Roblox. Okay. Clever. Oh, Clever getting a little bit of red candle sticking. I'm gonna leave this down here. I'm gonna do that a little more manually. I don't think it's gonna go down there very quickly. We'll see. All right. So Naked, Clever, Sundial. Sundial's pushing. It's Sundial. It's the cannabis. Yeah, it's cannabis. They're the ones pushing today. And everybody loves to swing trade Sundial. It's running away a little bit right now. Didn't we just look at the volume here? Good, look at this again. 400 to 1.8 mil, maybe with an average around 900. Just sort of on a quick look there. And here we are now, I'd say the average here is probably closer to 1.3 mil on these higher volume because we're getting 2.7, 1.4. Lots of volume over here. Yeah, it's definitely an RSI overbought right now. Let's see. Hourly, we are getting to that overbought as well. What about daily? No, we're not on the daily. On the daily, we're pretty low. So this one's been selling off since, well, certainly March 18th, but I think even longer than that. Let's take a look at this. Yeah, it's really been selling off since about February 11th, February 12th-ish, somewhere around there. Interesting. Yeah, nice run there. It's the cannabis is really the play today, it seems like. Both of these guys coming off bouncing up. Very nice. Okay, I'm gonna put an order in over here as a day. This one would not be I wouldn't hold Sundial, but I'm gonna put a lower limit in here. And if we don't get in, then we don't get in. Okay, let's do what, 3,000? No. Oh wow. That's funny. You have to do let's do like 30,000 shares. Okay, yeah, that's fine. So let's put that limit in. We'll just park these two things, and we'll see how the day goes. The day is young. The day is young. All right. Oh, I mean, both of them are running right now, so maybe don't be as stubborn as I'm being. Uh-oh. Oh, wait. No. What did I type? Oh my gosh. Come on. I put that in at, did I not put that in at 1.03? Why? Why did this execute at 1.08? I must have put this in at 1.3. What an idiot. What a dummy. I guess I just bought Sundial. Okay, so we're on the Sundial train. Ah, man. See, I am just not used to $1 stocks. Apparently, 1.3 is different from 1.03. Well, this sucks. No, now I'm going to get screwed. Oh, come on, man. All right. Sundial to the moon! No, man. That's not what I wanted to do at all. But oh well. All right. All right. Okay. Hold on. There we go. Okay. All right. Well, we'll see how the day goes on that one. Okay. I mean, Clever's moving up too. It's both of the guys are moving. I mean, even Tilray's coming up too. Oh, let's watch some of these guys, the sympathizers, I think we can call that. So what do we got here? Sundial, I'm sorry, not Sundial, Tilray. Tilray's trying to pump off as well. Let's see what other cannabis company we got. We got Aurora's coming out of the woodworks. Any other ones here? This one's not really moving. This one's not really moving on this. Canopy, maybe? I mean, Canopy's, yeah, I don't know that they have the volume right now. 20 to 30,000. Let's just go back to yesterday just to compare. Okay. No, Canopy's about the same as yesterday. Cannabis ETF is not doing well either. Okay. We're going to end up getting a red candlesticks. We gotta. I mean, maybe not. We'll see what happens. Anywho, Clever is the one that's still running. I mean, I should have bought the thing right over here at like 11:15, but I was too stubborn. That's all right. Sundial also moving. Okay, let's listen in for a moment to see what the news is. Let's see. Snap-on CEO. No. Snap-on. I feel like I'm surprised there's like, I don't know what to say. Snap-on tools are like the tools that I find when I go through like a hoarder house. Like there's Snap-on tools just everywhere. But I have to say I've never thought about buying a Snap-on tool. I don't know. Maybe they should market to millennials. Okay, I'm gonna pull up the Bloomberg terminal here. Let's pull up Bloomberg Live as well. Because right now it seems like a little slow news here. Did somebody just say GHIV went down? GHIV at 1262? No, it's not. Stop. Let's see. It's 1262. Then I've already been executed. Let's take a peek. Okay. Let's see what's happening here. Okie dokie. So EXPI is down 5%. Ooh, I'm going to buy some of that today. API, we're going to watch these things go down a little bit here. Piton just fell under 120. It's all my faves. What's up with the red today? Where is GHVI? I don't see GHVI that far down. So I don't think that is correct. Yeah, see, it's at 12. It's at 1368. Tesla's not down as much anymore. 0.95. It was down as much as what, like 1.3 or something there at one moment. All right. So anywho, then we've got, let's see here. Let's go ahead and see what Bloomberg's got. Brazil inflation hits a 4-year high. Mega cap sectors rise. All right.
This year. So the bulls are in charge, even as growth tries to retake its dominant position, as has been the case over the last year.
Abby, thank you. Great work this hour. Abigail Dilittle from the markets desk. Coming up, the market moving events you need to be watching. That'll be next in our trading diary. in the market right now. Record highs on the S&P 500, up 0.1%. We advance 5 points, 4,100. The year-end price target for a lot of people out there, just north of 4,000. And back in late October, it seemed ridiculous because in late October, we have had a 25% move on the S&P 500 since late October, early November, through to today, April 9th. This equity market in America has been flying, and the data is starting to come through. Payrolls Friday, PPI this morning, and then on to Tuesday when we get CPI in America. From New York City, this.
What do y'all think about earnings? I think this earnings season is going to be amazing. Personally, and I'm very biased in what I'm about to say. Personally, I'm very excited about the possibility of look at SOS run too, of tech earnings just absolutely destroying, and potentially a tech boom in this next earnings season. We'll see. We'll see. Hold on. Oh, I'm talking about the tunnel again. I really enjoyed this yesterday, talking about the tunnel.
There's 3 stations here. And what's going to happen is you get into Tesla if you're at the convention center, and you go from one end of the convention center to the other end of the convention center. There are 4,400 passengers per hour that can be taken by this underground system. It is a mile-long tube that they take from one side to the other. The convention center is more than a mile long from one side to the other, which is the reason they need this. It was $52 million that was paid for by the Las Vegas Convention Center as an amenity for the people who have conventions here in Las Vegas.
So basically, Elon Musk got free marketing.
Will be the world of concrete in a public fashion. And that's going to come up over the summer. That will be the big first in-person convention site here. There are plans now to actually increase and keep this going. Clark County is in the early process of getting applications to do permits to have stations. 43 confirmed stations.
Applications to do permits. Sounds just like the city.
We're going to be able to call a Tesla car like this, get in the car, and go to where you're going. Now, in the convention center here, it takes about 2 minutes to go.
I guess that's normal. It just sounded so bureaucratic.
This is just one more thing, one more way that Las Vegas is trying to innovate and make sure that they get that edge in conventions. Stu?
Yeah, you know what's so amazing, I just want to say, and the headline here just came through, by the way, quick note. Boeing 737 MAX electrical issue impacts about 90 airplanes. That plane is so broken. But anyway, if you have not yet watched this, I encourage you to watch this. This one. This is It's Over, what Tesla just did. But you'll get to listen to my thought process behind why there are two big reasons why this is such a massive Trojan horse for Tesla. One of them I talk about pretty close to the end of the video. But anyway, check that out. Great. Now we're getting the red. See, this is what I wanted to wait for. This is literally what I wanted to wait for, was the red turn. So stupid. We knew it would come. So now let me do it correctly, okay? So now we're just going to have to do it correctly. All right. Let's see, what was 030. That's more correct. Here, you know what? Just so I know I can't screw it up, I'll put it at 99 cents. Okay? That way I can play with it here. Watch it goes through. It's like, what? But anyway, so where I really wanted this was somewhere right around here. Somewhere here. Like if we hit 1.04 again, something like this. This is where I really wanted to enter. So I'm just going to leave that here right now since we're actively watching it. I'll be able to pull it up quickly. This I wanted like 1113, 1103 to 1113, somewhere over. See this purple line here? Just don't even worry about what it is under that. More under this one. Okay, so let's see what CNBC has for us. I know, watch it goes through for $99, right? Okay, we just TV commercials everywhere. Okay, great. Fine then. Let's see what other stocks are doing. So, in addition to this sort of cannabis run here, Wow. Why would EXPI be down 6.82%? That's crazy. That doesn't even make sense. Clover's down 6. Arcimoto down again. Arcimoto's just been getting beat to crap. Yeah. But these guys, they're not moving down much more. I'll tell you, the ones that are moving down a lot. I'm starting an airline ETF called 737 Max. Oh my gosh. There are jokes you can make there, but probably too soon. C3AI, Affirm down again, these guys. They're just like straight trending down. Rough. Invitae's down, Enphase down. Today, by the way, would be the day. If you wanted to do any kind of rebalancing, today would be the day on this kind of red to balance into these guys at some lower prices. So pretty red here. With the exception of really that cannabis space. So, okay. So let's see what we got here. We've got Clever. So now we've got the red candles that we were expecting and waiting for. So we're waiting for that bounce. And then we want to decide, do we want to buy in and actually play ball here, really? I'm pissed with myself because now I got... Like, I think we all know I was not trying to do that. The number was just so small. Yeah. Oh, well. It's all right. It's okay. Mistakes happen. We'll bail out. Carnival. Carnival's moving nicely. If Carnival's any indication of what might happen in the others, we might get this sort of... Not even really a fall here. I mean, this is almost like a flattening. One sec. All right. And yeah, let's see what Naked's doing, because Naked was hot as well. Let's see here. Naked's also kind of selling down a little bit. Still up like 20% though. Nice run though. Let's see if this comes down. How much this comes down as well. See, there we go. Now we're bouncing back. With the exception of Sundial. Sundial has not bounced back yet. We've got a nice bounce here on Clever. So I don't think we're going to get in on Clever, which is a little bit of a bummer because that's the one I would end up holding if I wanted to.
We're looking at our February final read on wholesale inventories. Our mid-month read was up 0.5%. Add 1/10 to that, we now stand at up 0.6%. And do remember, we came into the year up 1.4 for January to give you some context. As far as our February wholesale trade sales month-over-month number, down 0.8. That's a bit of a surprise. That follows up 4.9, and that's probably why we gave a little back. It was pretty strong, our last look, so a little take back. Think about it from an averaging perspective. Yields on 10-year notes are still up on the week. Down on the week and up on the day, 5 and 5. So we want to keep a very close eye on that 172 area. That's where we finished off for last week. Morgan, back to you.
Rick Santelli, thank you. Here are some of the stocks that we're watching 30 minutes into the trading session. Cruise stocks moving as investors watch for a post-vaccine recovery. Carnival getting 2 upgrades amid pent-up demand and potential summer restart. And the CEO of Viking Cruises joins us later this hour as well. But it's been a strong week in general for those names. Next, both the S&P 500 and the Dow notching new records, on pace for a winning week. Also a strong start to the new month and new quarter. And finally, Fubo TV shares surging. The company winning streaming rights to the Qatar World Cup qualifying matches for 2022. We're going to have much more on these throughout the hour. Carl.
All right. First up, though, this morning, the Amazon Alabama union vote count continues. Results are slowly coming in. The preliminary results indicate the rejection of unionization.
All right, let's go back here. So what's interesting is I can't drag a cell. I just put a cell in here just so I could drag this around. But, oh, there we go. Now I can drag it. Okay, perfect. So I could kind of, I like having those available so I can kind of drag those limits around, which is what the intention was the first time, Kevin. Clever's moving again. The volume is nowhere near what it was earlier. It's a substantially lower volume. In fact, you can really see those volume bars here. So substantially lower volume. Sundial it's not losing as much volume as Clever is. I mean, even including that opening stick there. If I don't include that, yeah, it still has volume. So Sundial still has good volume. Clever's volume isn't really there anymore. Voyager Digital's up 3%. Nice. Let's see. There's no way Voyager, in my opinion, I don't know. We don't know. But in my opinion, there's no way Voyager Digital is not going to run when Coinbase explodes. Unless Coinbase, watch like everybody thinks Coinbase is going to explode and they price it so high that it plummets. That'd be interesting. I mean, I feel like that'd lead to a lot of buy the dipping. But yeah. Okay, Sundial's now going under our average here. Well, not our average buy or anything, just the VWAP. But let's keep an eye on this one. Let's drag this down a little bit more. What I wanted was to wait for the bounce. Nah. So we're waiting. Volume's still decent. Still decent at Sundial. But we're still falling. Okay, I'm just going to leave that right there. So, but at the same time, Clever, yeah, but see, Clever's volume is plummeting as well. So I'm going to go ahead and delete on Clever because the volume is just evaporating on Clever. And Square, man, Square killing it again. Nice. Up another 2.34%. This is one that's been running lately. Really, really incredible. All right, watching Sundial. Still red candlesticking here. Waiting for watch it ends up bouncing off 1.3, which is or 1.03. See, that was my mistake. We'll see. Let's go ahead and zoom out a little bit. See if we can get some levels on Sundial. All right. Have I looked into Planet 13 recently? Briefly. Yeah, I mean, I'm positive on the company. Optimistic about it. That's what I mean. All right, so what do we got? So if we zoom in on Sundial, it's really tough to see on the day support level here in the past around this range. If I go to the hour, where are we? 1.03. Yeah, see, the problem is we've just been trending down for so long. We've got some support at 1.1, 1.04. See, there it is. 1.04, 1.3 had a bounce off that. That's where I wanted to buy. So I'm going to draw a line there. 1.04. That's 3.8, I think. 1.038. That's not bad, though. And see, we've kind of touched around that region here as well. Fell a little bit below before that. 0.92. Here's a 1.1. I'm going to draw that one in too. 1.1, just sort of, it was just a single touch point there. And these are at the higher levels. Just trying to get some touch points at these price ranges here. Yeah, may as well mark that one too. 0.9, somewhere around here. There we go. All right. Let's get back into where it sits right now. Good old Sundial. Oh, there we go. So see, we're within this box. That's actually interesting. We're within the box. Yeah. Still deciding if it wants to go what it wants to do. If it wants to go green or red here. But we're getting closer. Let's see how the other ones are doing. Clever's still moving up. Volume's gone. This is getting the CNBC pump right now. Fubo TV. Moderna had a really nice run here, and it's slowing down. SOS also had its slowdown period. Voyager Digital. Voyager's still running. Remember, Voyager, by the way, you have to grab it on something like, what's it called? TD Ameritrade. Somebody says Sundial hit 92 cents yesterday. Yeah, did it sell off going into yesterday? Let me see. Let's look yesterday. What did we have yesterday? Did I miss yesterday? Okay, some bizarro charts. So yesterday, oh yeah, look at that. Yeah. See? Oh, that's funny. That's pretty close to our line over here. that we drew from another touch point, 0.91, and this was a 9.2. Yeah, okay. All right, so, oops, I didn't mean to hit that. All right, here we go. Let's zoom into this. So this is usually an ideal spot to buy, but the problem is the volume is much lower right now. Now, that does not necessarily mean it won't go up. It's just one of the indicators. So that's why I'm going to stand by with any real additional purchase here. And it shouldn't even be an additional purchase. It should be my initial. I'm very mad at myself. Live mistakes. But Clever's still moving. Look at this. I mean, Clever with low volume. Clever's still moving nicely. 13.4% with the low volume that we have. So, all right, we'll keep an eye on it. Let's listen in to see what this New York Times guy is saying.
Never got around to it. That was very disappointing. We need a lot of this. But let's face it, a lot of other stuff has been gerrymandered into this quote-unquote infrastructure package that is not really infrastructure. And if that's how the administration wants to approach this and go to Congress, fine. I just think they should be honest about it and not pretend that a lot of this is really infrastructure. It is, there's a grab bag of other things in there, including a lot of money being spent on, home health care and other issues that traditionally would never have been considered infrastructure bill. But if that's the price we have to pay to get a bill, maybe that's okay. I think
all right, this is a little boring. Just a heads up, I want to make it clear, Sundial is not a fundamental buy for me. It's a trade. That's the only reason we're looking at it, is because of the momentum going into the morning. And that's why we're like, if I was going to fundamentally buy it, it wouldn't matter to me if it was 5 pennies one direction or the other. But on a trade, it does. So that's why we're looking at it. It's as a trade. All right, so let's jump on over to Fox.
JP Morgan also calling the stock a top pick. It's up nearly 2%. Big gain for a big stock. Take a look at Boeing. It's flagged a possible electrical problem with MAX jets. It reportedly affects 90 of those planes. The stock is down 1.6%. That's taking some of the steam out of the Dow because Boeing's a Dow stock. Look at Microsoft hitting another all-time high. I can hardly believe it. My good fortune, that is, because I own a sliver of this thing. 254 on Microsoft. I never, ever saw that coming, but there you are. Some of the numbers coming in for the Amazon union votes. Ashley, do we know the tally so far?
Well, it's not looking good for the union, that's for sure. It seems a large margin of those Amazon warehouse workers in Bessemer, Alabama, have voted not to create a union and join it. According to the Wall Street Journal, after about half of the ballots have been counted by federal officials, roughly 70% of the Amazon...
Okay, Varn's boring, CNBC's boring, everyone's being boring right now. It's this guy again. All right. Where's the news? Do we have news today? Let's see.
Coming up, we're going to hear more from the Fed Vice Chair, Richard Clarida, and when we think the Fed's going to think, when do we think they're going to think about adjusting interest rates? This is Bloomberg.
That's a good question. When are you guys going to think about starting to think about raising rates? That's mostly because they mentioned that right now they're not even thinking about raising rates. So now the question is going to be, well, what are you thinking in terms of when you're going to start thinking about raising rates? Everybody wants those hints. That's going to be good. We'll have to watch that. You stay for the Richard Clarida interview with Bloomberg here. So we'll keep an eye on that. Sundial's not really showing great signs here. It's Clever, on the other hand, is doing great. Like, Clever is doing very, very well on this low volume. The volume has gone down a good chunk on Clever. We don't have the sell pressure at Clever. Clever is very, very oversold, in my opinion, at least when we go out a bit. Then again, the R size is like 48. But I don't know. In my opinion, it's oversold. Mostly because it's been down for quite a while here. Yeah, we've got, and I actually like the fundamentals of this company. So Sundial, Sundial, are we ticking up again? Did we finally get an uptick? Nope, never mind. See these pennies, they're so small. It's hard to know when I look at this chart what exactly is happening here. So there we go. I see a little bit of green. All right. So anywho, we'll see how this evolves. We have momentum, some momentum in the cannabis space today. And Sundial was showing that, but we wanted to wait for that confirmation, which is kind of what we're getting now, but we're not getting that push up again. Yeah, see, it's just trading sideways right now. It's not so good. Not so good. Not very, very good. All right. Let's see. Voozy up. Voozy. Yeah. No. Sundial. Yeah. Barcoding. Yeah. I know. Tell me about it. So yeah, Voozy's killing it. I mean, really, just day after day here over the last few days, it's done very well. You know, coming up from around what 22 to around 32. Very good. What's so crazy is we did a fundamental analysis on this in the course. I was just too much of a baby to go, oh yeah, VR headsets, this is great. But the fundamentals actually look good on it. Like fundamentally, it looked very nice, Voozy. Especially if they start getting some more reorders and larger contracts. That's what you want to look at on Voozy is reorders. So I know there were some people who bought it from when we were doing our fundamentals analysis in the course. Because every day at 9 a.m. I try to do a high conviction analysis on some of these reports. And those are always fun. But that's what I would be looking for on Voozy. Yeah, this is just garbage. I think that's going to go down as an oopsies mistake, but that's okay. Oh, here we go. Here's the guy we wanted to listen to.
That are consistent with a fully employed economy. And third, we want that to be sustained. We think that's appropriate since we've hit the effective lower bound. Inflation's been below our target for most of the last 10 years. And under those circumstances, that is a good policy. You are correct that in the past, the Fed was more preemptive. And indeed, my research suggested that if you've got good models, you want to be preemptive. But if the models are not serving you well, you're more robust if you're looking at actual data. So that's the way I characterize it, Josh.
The conversation, as you know, Vice Chair Clarida, right now is over what substantial progress actually is. You're familiar with the debate. We talk about it almost every single day on programs like this. Do you think it's necessary to define what substantial progress actually is?
Well, first of all, it's actual progress. I think that's an important point. It's not projected progress. It's hard numbers on the labor market and on prices. That's the first point. Secondly, we're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that. As Chair Powell has indicated, and I've indicated, as we go through the year, as the data comes in, as we release our SEP projections based on that incoming data, we will have a sense on where we are relative to that progress. And as Chair Powell's also indicated, as we think we are making that progress, we will communicate that to people who listen to our communication. And so I think that this is really where we want to be. It's actual progress. It's not projected progress. And as we go through the year, we will be informing the public about our views on that progress.
Are you afraid of inflation? Should we fear inflation?
Well, the reality is we have a dual mandate, and half of that is price stability. And so the Federal Reserve, every Federal Reserve since Paul Volcker's leadership has been committed to that. The Powell Fed is too. But Tom, 2% as a ceiling, which is in effect the way many thought of our prior policy, also does not serve the economy well. It has, in fact, serious implications for the labor market and prosperity. And so essentially what we've said is that we want inflation outcomes that keep inflation expectations anchored at 2%. And that's going to mean sometimes we'll be above 2 and sometimes we'll be below. We focus on inflation expectations intensely. We have a new index of common inflation expectations. I would say, and we've indicated, Tom, that because of the nature of the pandemic shock, a year ago. As we move through 2021 on a year-over-year basis, headline inflation is going to likely move above to, because we're going to be comparing this year's prices with last year's collapsing prices. But we expect in our baseline most of that to be transitory, and for inflation to return later this year to around 2%. That's our baseline. Let me also say that around the baseline, there are risks on both sides. And in the risk case in which inflation were to begin to move above a level consistent with price stability, we would have the tools to address that, and I'm confident that we would under that risk scenario.
Me too.
Fed Vice Chair Rich Clarida talking to Tom and John a little bit.
Okay, not a lot of extra insight there.
That's exactly what we got there. Mike McKee, Bloomberg International Economics and Policy Correspondent, with us now. Outcome-based, less outlook-based. Let's talk about how much clarity do we get from Clarida on how much data we are going to need to see for the Fed to react?
Well, he made a couple of contradictory points, but maybe one stands out, and that is that by the end of the year, we should have an idea of whether the inflation they expect is going to be transitory. You can see the PPI numbers that came in today. That's goods inflation, and goods inflation was the real reason we got that 4.2% print on a year-over-year basis for PPI. They're expecting that because they think we're going to have shortages as the economy ramps up again. Does that start to go down again? That's going to be the question. But he also said we want inflation at 2% or a little over for some time, a year or two. So which is it, a year or two, or by the end of the year? It's kind of hard to know.
Well, because year or two are very different when it comes to an asset investing and what's going to happen with yields. What did he want? Do you feel like the market needs to reprice what they've already priced in terms of a hiking cycle, and where do they need to do that? Like how?
Probably not. They've priced in where we are today. There's going to be a lot of debate about what the Fed is going to do.
They're not too aggressive?
We have so many Feds, there's 18 Fed people, and as they speak throughout the year, we're going to debate this as the data come in, and of course CPI next week is going to be really interesting. But I think you have break-evens. That's what Jay Powell has been saying, and a lot of the Fed officials have been saying. It's break-evens that are going to decide. If they start to rise significantly, particularly longer ones, then you're going to see the Fed maybe move closer to reacting. 5-year forwards at this point are pricing in higher inflation. 10 years, not so much. So they think they can get by for a while unless those start to move.
Mike, thanks a lot. Really appreciate it. Bloomberg's Michael McKee joining us there. And speaking of a slew of Fed speakers that will just keep on speaking, we have another one. Let's go to Kathleen Hayes. She's now speaking with Dallas Fed President Robert Kaplan at the Engage Undergraduate Investment Conference, sponsored by the David Kudla Foundation. Kaplan recently saying we're not out of the woods yet, still watching the virus.
Students here at our Engage Undergraduate Investment Conference are on the edge of their seats because actually a lot of young people have been a lot more interested in investing.
So, yeah. Okay, not really. I mean, let's see what he says, because here's I think this is the Dallas Fed president. So let's see how he responds. It's always good to get these insights from the Fed, but we'll jump on over to the other news in a moment.
Hard numbers before we even think about, and I will paraphrase Jay Powell again, thinking about any moves away from stimulus. I assume that means starting with tapering, eventually moving on to rate hikes. Is there anything about that stance that you don't agree with? You mentioned trying to balance the risk between being patient, being prudent, but not waiting too long. So how do you stand on that?
So I am going through that balancing. And yes, we're going to be less preemptive at the Fed than we've been in the past. And even on asset purchases, until it's clear to me that we've emerged from this virus and weathered it, I'm not going to want to be preemptive in talking about asset purchases. Having said that, I don't want to go to the other extreme of being reactive either. And so I think a combination of forecasts and seeing actual results is probably the balance that I'll find. And so once it's clear to me that we've weathered the virus, I'm going to probably want to err. I'm personally going to want to err on the side of starting to remove some of these extraordinary actions sooner rather than later. And why? Because I worry that they're creating, if we do them longer than we need to, they're creating excesses and imbalances, excess risk taking in financial markets, which is benign while you're going through it. But when things get back to normal, and people need to de-risk, that can create a severe tightening. And if you're too reactive through this process, you could actually have the effect of shortening the business cycle. That's at the other extreme and creating a severe slowdown in order to get out from behind the curve. So there's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
Well, another thing that Fed officials are stressing right now, for example, Rich Clarida again told Bloomberg Television today that, well, the jobs report, almost 1 million jobs in the month of March, right?
By the way, what he's saying here is actually important. It's like, hey, as long as we keep essentially seeing these variants and this potential like fourth wave, we don't even want to talk about tapering.
Almost.
Which means reducing bonds.
Passed in the last year. It's a record amount in modern peacetime history. So is that view on the Fed perhaps maybe just needing to be advanced a little bit? Like, okay, fine, that's where we are now. But if this hole in the labor market starts filling up, does the Fed's position have to adjust a bit to that?
Yeah, and so subject to me being convinced we've broken the back of the virus, which again, I just keep emphasizing, we're not there yet. Once I feel that way, yeah, I'd rather be on our front foot because I think excessive accommodation for longer than we need to has side effects, and you don't feel them while they're going on. They're easier to see in hindsight, but I'd rather move sooner rather than later, and I think we'll be far healthier for it. But again, subject to me being clear we've weathered the virus. That's the thing that's giving me pause right here and having me hold my fire.
What's the biggest risk of not being on your front foot?
The issue is, so we're watching inflation, for example, and we know there's going to be a price surge this year. We're seeing it already. And the year-over-year numbers are going to be attention-getting because they're going to be elevated. I think some of that is going to be transitory. And supply chains, the semiconductor issue. I talk to people in the industry. It's going to get worked out. It may take 18 months, but it'll get worked out. But we're also going to have a tightening labor force, so some of it may not be transitory. I'm going to be monitoring that very, very carefully. Okay. And in addition, looking at excess risk-taking in the financial markets. And both those, for me, if you let them go too far, we have some tools to deal with them. But again, employing them too late can cause, on the other hand, when you do it, a severe tightening, which may cause a undue slowing. And so I'd like to see sustainable achievement of full employment and price. To me, that's the objective.
Okay. Well, I guess the question is, the Fed has its tools. The Fed has its tools, but the question is how they use them, right? And I think what you're suggesting, they're strong tools, and you could use them in a way that would be stabilizing. But speaking of destabilizing, reading the minutes from the Fed's meeting out this week, interesting to me that when—
Hey, quick note, Upstart is running. So if you had bought in at Upstart and you were looking for a potential exit, Upstart's running right now. We mentioned this was a possibility yesterday, but I did day trade that one. Did come out slightly profitable on it, but it is at 129.51 right now, in case anybody is in that one looking for an exit.
And including moving your first rate hike up to 2022.
Yeah. So you should assume whatever I'm saying publicly, I'm saying that and more privately in an FOMC meeting. So I'll just speak for myself here. I'm very aware of the fact that equity markets are at equity market cap to GDP is at historically elevated. Okay, credit spreads are historically tight. Now even the housing market, not speculative, but is at historically elevated levels, and there's lots of supply-demand issues around the country. And so, and then secondly, I'm very aware that we have great visibility, or not great, not perfect, but very good visibility on bank capital and bank risk-taking and stress testing. We do not have good visibility on non-bank financial markets, and you got to be very aware of that. So whatever risk you see going on that I hear about, it could be that and much more. And
Okay.
so that's what
Wow.
concerns me.
He's actually probably a bear on this group.
There's a lot of talk, oh, the Fed can't hike rates until it's met those goals, full employment, inflation above 2% and staying there. What they say is, well, we need substantial further progress to think about tapering. What does that mean? Can I conclude that the Fed is planning on and realizes it's going to have to start tapering at some point, and that will be potentially well before it starts increasing rates?
My personal answer to that question would be yes. And what substantial further progress means for me is there's clear evidence we've weathered the pandemic and that we've turned the corner and we're marching forward toward achieving our full employment and price stability goals. When it's clear to me that that's happening, I'll be advocating that we should start withdrawing some of this extraordinary actions that we've taken. And yes, it would start with asset purchases.
And in fact, when you look at the risks in the market, we have seen leverage. We have seen concerns about leverage, but this was all really brought to the table by Archegos. Something started with.
This is actually a good interview. This is a lot of good information here. This guy's kind of a bear.
I think the question is, when you see this
of the Fed, out of the people at the Fed, he's like, hey, inflation could end up being really bad.
To a bank, right, who's involved. It's around the world, go to Japan, go to a lot of places. Is this a consequence of too much money, too many bond purchases, too many low rates being poured into financial markets for something that maybe now is on the point of being too long?
So I think these individual situations that we're seeing, there's a whole range of factors beyond monetary policy that goes into each one of them. But I do think it's wise for us and for me to acknowledge that accommodation and asset purchases, monetary policy is one of several factors. And so now is not what I can see and what's being reported. I'm more concerned about what I'm not seeing. And I am talking to industry contacts and getting anecdotal evidence that suggests to me people are pushing themselves to take more risk. And the reason it concerns me is one of the reasons they tell me they are is signaling from the Fed. And so I'm not thrilled about that. And I'd rather, I don't want to be encouraging that.
Well, that's a pretty powerful statement.
Okay, you've been listening to Dallas Fed President.
That was good.
Speaking to Bloomberg's Kathleen Hayes at the Engage Undergraduate Investment Conference.
All right, we're gonna pull out of this. Yeah, I mean that's interesting. He's kind of a little bit of the bear there on the group. Very interesting. Wait, what is this here? Now they're talking about Elon over here.
Boosters for orbital launches. It's already got business. It's already doing missions. And yet, when you take a look at that SPAC and where that's trading as well, it hasn't been particularly strong either. I think it's been trading around $11 a share, David, to your point.
Yeah. Well, we're keeping a close eye on many of these, although at least it's
okay. Let's go back here. So during the Clarita talk, I did close out Sundial. I think it was somewhere around like 1.055, like right around in this kind of barcoding mess. It's just the volume has evaporated on this one. I don't really look at that as a day trade loss. I look at that as being an idiot. I think we all saw. I wanted to put that purchase right there, but as an idiot, I put it in at 1.3. Not that it really matters. It is what it is. Whatever, right? It happened. It was a loser mistake. But we would have had that in here, and we would have waited for our confirmation, which we wouldn't have gotten. We really never got it. We got sideways barcoding, which is just not so good. And the reason it barcodes, by the way, is because the price is so low that it really just moves in increments of half of a penny, and it doesn't get smaller than that. So that's why you get kind of that bizarreness going on here. So Upstart had a nice little run here. Like I mentioned, as I said a few minutes ago, Jerome Powell is going to appear on 60 Minutes this Sunday. Nice. I'm going to put a calendar note on that I want to watch. So let's see here. 60 Minutes, Jerome Powell. That's usually, what is it? Is that 6 p.m. Eastern? I don't know. Cable TV. Anyway, so that's interesting. Okay, that's a cool update. But take a look at this. Yeah, so Upstart is now at 127. Had a nice little run here, a nice brief pop. So there's a nice opportunity for anybody who held on to it, for example. All right, so what else do we have here? Clever is incredible, just because Clever really just kept moving, even with low volume. So we were looking at this one. Gosh, somewhere around what? It was around 11:15, 11:30, something like that, right? Yeah. Now we're up at 1170. Okay, so nice moves on Clever, up almost 14%. Top of the chart right now here in terms of what we're tracking. Naked's cooled down from its run. Sundial's pretty much flat. Upstart is red candle sticking a little bit. Voyager's up 2%. Not as much as we saw earlier. Yeah, looks like we had a little bit more of a run, maybe up to about 3%ish. All right, what else here? Open Door, Square. Square's chilling out a little bit as well. Yep, see Square's chilling down. 263. I mean, we're almost back at all-time highs, like Square. Rookie mistakes. I know. No, it's you know what it is? It's just I'm not trying to make excuses for it, but I mean, I think it's just when you I mean, I don't know what it was. Maybe it's just because I'm live. I'm excited to put it in. I don't know. It's just I just have to take that extra like breath of like, wait, make sure that number's correct, because I've done that before. So I just have to take a pause, or set the limit like way below, way above, and then drag it to where you want it to be on the chart. I like that strategy personally, and especially if you're doing TA. I mean, then you could just drag it into place. I prefer that strategy. Okay, what's the CNBC market alert?
Not really too much of a response, at least, to signs of inflation. Let's bring in Byron Wien, Vice Chairman at Blackstone's Private Wealth Solutions Group. And Byron, good morning to you. I want to start there if I can, because the March PPI was up about 1% month over month. That was double the estimate. The core rate jumped by 0.7%. What does that mean to you? Is it a concern, or is the market, at least today, seemingly overlooking it, right to do so?
I'm on the side that inflation is going to be worse than the consensus thinks. You know, last year we threw $2 trillion at the economy when we were in a bear market and a recession. Now we're in a pretty strong recovery. And the market.
Where's your suit? I just want to quickly show this so I can put it away, and then we'll go back to this. But look at this, folks. Somebody a course member sent me this. Thank you, by the way, for all the due diligence y'all do in the course. It's really fun chatting with y'all. But anyway, take a look at this. So this is Hotel Finder for Peloton. You could actually go in here and click book a room. Fairmont Miramar has 5 fitness and bungalows, has 5 Peloton bikes. They got 4 over here. Jump over here. They got 2. Kind of cool, honestly. That's cool. I didn't even know that existed when I made my video about saying like hotels are going to use this as a way to attract customers. The more you learn.
Maybe it'll shrug it off, but I'm worried that now is the time that you should apply some caution. The market is very fully priced, in my view, and the dangers of higher interest rates are ahead of us.
Okay, you laid it all out for me there. So let's assume you're.
Did I say put the line way above? Obviously, I meant to say when you put a buy limit, put it way below. Sell limit, put it way above, and then kind of like drag it where you want it to be. Clarifying. Thank you.
For equity prices, and are there parts of the market, Byron, that you would still favor, perhaps, as being a good place to be in an environment like that?
Well, I definitely think we're in a bull market. And I think that this rise in rates could create a correction in the market, but not cause the bear market to resume. So I've been, for a few months, I've been apprehensive about a 10% correction. I think we could see that, maybe even something more. But I think since the fundamentals are very strong, I think the S&P 500 could earn as much as $200 this year. So as a result of that, I think the bull market will resume, and I think we'll end the year higher than where we are right now.
Just to dig into that a little bit more, Byron, it's Morgan.
So it's interesting. He thinks inflation's going to be bad. He thinks we could see this 10% correction on the indices, but actually thinks we're going to end the year higher than where we are now.
They are surprises. They are not predicted.
Okay, surprises. Yes, thank you. But one of the other things you note there, you noted at the beginning of the year was the strong dollar, which we have seen strengthen in recent weeks. And I wonder what you think that trajectory looks like from here.
Yeah, well, rising rates are generally good for the dollar. I thought the dollar would be strong, not so much because of rising rates, but because the U.S. is a good place to invest. The economy is recovering. We're certainly going to have real GDP increasing 6 to 8% this year, maybe even more. And earnings, as I said, of $200 are very impressive. We've made more progress than almost any country on the coronavirus. So I think things in the U.S. are quite favorable. I think overseas companies are going to be willing to invest here. And as a result, the dollar will be strong.
Yeah, I mean, this is literally the things that we hear from the suits all the time. Like, I think inflation is going to be really, really bad. Wait, so you think the market's going to go down? Well, I think at the end of the year it'll be higher. Like, come on. It is literally talking out of both sides.
Between the 10-year yield moving up and any real downside in the overall S&P is not going to be there, or it's only going to be temporary in nature. Dig into that for me a bit.
Yeah, I think the market, if the 10-year were to go to 3%, that would still be a relatively low interest rate. And if earnings continue to be strong and the virus continues to be under control, I think after a correction, the market can resume its upswing. Because
I don't see it going to 3%, and I don't think that's relatively low. I think 3% is relatively high. 2.5, 2.2 on the 10, maybe 3. I don't know.
But at 2 to 3% for sure, and maybe in 2022 at 4%. So we're in a long-term economic expansion, and as a result of that, the $200 for this year is going to increase in 2022, and I think investors are going to be willing to pay for that. So that's why I said I think the market will end the year higher than it is today, even though there may be a correction in between as a result of higher interest rates.
Okay.
All right. Laid it out for me. I'm going to remember that for our next conversation, see where we stand.
All right, we get it. So, all right, let's jump. Where do we want to go now? Let's do top news. All right, let's see what we got here. Yeah, I think the 10-year at 2%, probably close to happening. 2.5%, maybe 3. For us to get to 3%, we would really have to have the Fed actively raising rates already. All right, what do we got here?
In my opinion, were the most important to pay attention to. Pretty much every aspect of this report was at or near some of the highest levels, whether month over month or year over year. But it isn't only in the U.S. We had another very large economy release their information regarding inflation, and China for the month of March on their producer price index was up 4.4% year over year. That's versus February.
All right, let's jump for a moment. So what else do we have here? Bank earnings kickoff next week. That's CNBC's talking about that producer price inflation that we saw. We've got, what is this, border wall again? Let's see. I'm sure it has to be about business.
Quality service. Waterfront homes on Cape Cod are always
okay. Fair. It is real estate.
2021 is shaping up
to be a summer like no other.
The demand is ravenous.
Realtor Blake Decker showed us one home that rents for $11,000 a week. But you're out of luck all summer.
We are completely sold out of our rental inventory at this point.
Similar story as we look around the neighborhood. So we stopped by the Red Jacket Beach Resort, and the line there was nearly identical.
We're expecting a record year this year.
But that creates a challenge for resort executives like Matt Pitta. Red Jacket needs to hire 100 seasonal workers. So far, they're only a little over halfway there. And normally they rely on students coming in from overseas on J-1 visas. Not this year.
There was really no guarantee that once it came time to get people here, you know, what if a country they were coming in from was having an outbreak or what have you? So we decided we're going to go all in and do everything we can to hire as many local people as we can.
The issue is finding those local workers on Main Street.
You know,
in Hialeah.
J1's very, very common in those vacation destinations. You know, Bulgaria, you know, even Brazil, Argentina, all over. Very, very common. I mean, some wonderful, wonderful like ski instructors in that all across the world. I think it's really cool. Like if you ever go to a ski resort.
Because unemployment benefits have been extended.
People feel like they can cover their bills staying home, and who wouldn't want to stay home and pay their bills?
Erica says she'll probably end up waiting tables herself unless the hiring picks up. Now, the fear is the hiring won't pick up as the latest relief package, as you know, extended those enhanced unemployment benefits for many workers through early September, pretty much the whole summer season. Stuart?
Yeah, I understand it. All right. Thanks so much, Connell. Enjoy your time on Cape Cod, young man. It's a lovely place. All right. We got a new survey. This is fascinating. And it reveals just how many remote workers would quit if they were called back to the office. All right, Ashley.
I want to hear this.
I know the number and I can't believe it, but you tell the audience how many would quit.
About 1 in 3 professionals, 34%. That's
whoa.
High. Those professionals currently working from home because of the pandemic would look for a new job if required, rather than return to the office full time. That is remarkable. It's according to a survey by global staffing firm Robert Half that also shows nearly half would prefer a hybrid work schedule, dividing their time between work and another location. But many actually expressed concern about working fully remote. 28% of respondents believe relationships with coworkers would suffer. 26% were concerned.
That's interesting. 1/3 of people would just quit if their boss was like, all right, time to come back to work. That's cray. All right, well, okay. Let's see. One sec. Okay, so let's go. Let's see here. What else do we have to do? That's a very interesting survey. All right, what's CNBC got to say? Nothing, right? Because they're a commercial. Okay, fine. So let's go back over to the sticks here. So Levi kind of selling down a little bit. Clever selling down a little bit. Just the volume has evaporated on Clever. Upstart back to 126. We've got Square 262 here. We've got Salesforce. Salesforce has been stuck in the 220s for a while. Where's Sundial? Where did Sundial go? 1.045. I'm still mad about it. I got to get over it. It really doesn't matter. I guess nobody likes making mistakes live. Although I even talk about the mistakes that I make offline too, so it doesn't really matter. But anyway, let's see. Palantir learning experience. That's what you got to chalk it up to. It's stupid though. You gotta be an idiot to do that. Well, self-defined. Clover all of a sudden down 7.5. XL Fleet down 5. Blink's down 5. EXPI not down as much as it was earlier. At the open, we were down at $40 there for a moment. That's crazy. And now it's recovered a little bit here. Piton just under 120. I like it. Let's see here. Hyliion, Ubiquity. Okay, some good red today, which is crazy because Tesla just like dominated too on like Chinese month-over-month data, and the market's treating it like crap. It's fine with me though. Somebody had a super chat like 30 minutes ago or something crazy. So I don't know. Hopefully they're still here. But anyway, the super chat was saying, why is Tesla down despite all this good news? And see, the thing about Tesla is the only time Tesla really goes up is when we have these 3-week streaks. It's for some reason, it's always like 21 days of Tesla just literally going like up. It's very bizarre, but otherwise it just vacillates, and no good news or bad news really pushes it massively in one direction or the other. It just kind of ebbs and flows with the waves of the market, in and out, up and down, until you get those 21-day kind of runs, which has been a little bit of time since we've had that. So, what else? Is there anything else? No. It's time for more coffee.
Renovation here. They've really spent big on.
No, don't care. We need business. I mean, I guess that is the sports industry there in Los Angeles is business to somebody, but I don't see that as business to our stonks right now. Look at Property Solution SPAC. This thing was up. It was green, and it just gave it up. It's green in the pre-market. So that's like a 6 or 7% swing today, along with Fisker right here. How low is Tesla today? Tesla isn't it like 1% down. Let's see. 1.4, 1.3 now. Wow. Yeah, selling off a little bit more. GameStop 168. Clever's, I mean, it just doesn't have the volume to keep really going here. Same thing with Sundial. It's just flat here. Hey, if it runs, good for it. But Roblox at 74, finally up over that IPO pricing. Coinbase next week. Gonna have to come up with a strategy this weekend on Coinbase, so stay tuned for that. Oh wow, look at Etsy's at 218. My goodness. And Palantir dancing around over here. Yeah, I gotta add some to Palantir. 23.72. Anywho, okay, so here's the thing, folks. In the course member live stream today, I'm going to be talking about some sells and some buys and some a transition specifically in M1 Finance. So stay tuned for that. It's going to be fun. All right, folks, I will see you in the next one.